If you've been following my trading journey, then you will know that it has been a roller coaster lately. A series of losses have tested my mindset, and last week I was struggling. But after staying disciplined and trusting my strategy, I have turned it around. This week, I have secured my biggest win of 2025, over $500 in a single trade on pound dollar in less than 2 hours. And in this video, I will break down the exact strategy that I used, how I stayed mentally strong throughout a losing streak, and some tips that will help you to keep your emotions in check whilst you are trading. Let's get to it. Before we dive onto the charts, let me talk about the backstory of my trading week. Now, I am not your typical trader sitting in this glass-walled office in a city, nor am I on my own luxury private yacht off the coast of Dubai. Nope, I am a full-time mother of two rather energetic boys aged 1.5 and 3 years old. And let me tell you, that teaches patience like no trading book ever will. This week was all about resilience. I got through 4 break-even trades, one of which could have been a really nice winner, but I was too cautious. Then I took a losing trade before I finally landed my big win. And here's the funny part. Whilst I was managing my winning trade, my children were absolutely intent on playing hide and seek. At first, I was frustrated. I just wanted to manage my trade. But then I saw an opportunity. I counted down the slowest 10, 9, 8, 7, 6, 5, 4, 3, 2, 1 of my life, whilst they ran off to hide. And in those golden seconds of peace, I secured my trade. Hey, a trader's got to do what a trader's got to do. Now, before we jump onto the charts and break down the exact strategy that I used for the winning trade, let me quickly talk about the 5%ers, the prop firm that I trade with. There have been a rise of so many prop firms out there nowadays, and I still continue to trade for the 5%ers because, in my opinion, they are certainly one of the best in the industry. They have different programs available, they have realistic rules to respect, realistic targets to reach, and they offer immense support along the way. They provide a fantastic instant funding program, which is the program that I am funded with. And that gives you this incredible growth plan where you can scale up your account to a size of $4 million. I have been trading with them for a while now, and honestly, they are one of the best prop firms out there. So if you are looking for a prop firm for yourselves, if you feel ready to have a go at a challenge to get funded to be able to make more money trading, check out the link below for some more information. Okay guys, so here I am on TradingView charts. TradingView, if you don't already know, are an incredible chart platform. This is what I use to carry out all of my analysis on. I don't trade from TradingView, although you can do that if you want to. And I've got a link below in the description if you want to find out some more about TradingView. Now, I'm going to try to go through my strategy for this winning trade in 4 steps. I'm going to try and keep it structured for you guys. And step number 1 is, in fact, structure itself, analyzing market structure and utilizing it with top-down analysis. And for that, I always start on the daily time frame. The daily time frame is the highest authority. It's the most respected chart, and it allows you to see the market much more clearly in terms of the directional bias, whether you are looking to go long or short. That's always the starting point when you sit down to trade. The question you need to ask yourself is, in fact, do I go long or do I go short? Not, do I buy now or do I sell now? First, figure out which way you think the market's going to go. And so on the daily time frame here, you can see that if we zoom into the most recent price action, price has been coming up. Keep it simple. Is it going up? Is it going down? Is it ranging? Here it's going up. If we just go from the low of this little start of the trend here, you can see that price is making higher highs and higher lows, little double top there, a higher low, breaking above that, it's swinging higher, and so that alone should show you that we are looking for longs. That was one of the biggest mistakes that I made during my emotional losing streak last week, was trying to go against the trend. I was trying to do a reversal strategy, but it was a little bit too preemptive. And so I wasn't going to make that same mistake again, and I was looking for longs. But what completely solidified that directional bias is the previous daily candlestick. That is where so much information is. And what do we see on these previous candlesticks? Well, you can see last week, this was the choppy action we had where we had a little pullback, but we got this big bullish candlestick up, another pullback, and then on Tuesday of this week, we got this green close here. So as the week started, on the Monday, we had a bearish candlestick, very bearish because we did break Friday's high, but it had a large pin here, a large upper wick rejecting that pin bar candlestick. Now, I thought on Tuesday we were going to see quite a strong drop from that candlestick, but as you can see, Tuesday we actually got more of a bullish close because we broke the low from the Monday, but it still closed bullish with a wick to the bottom. We didn't break Monday's high, but still it showed that there was still some strength to the buying side. And so on the Wednesday, I was coming into the markets with a long biased mindset. Then I dropped to the 4-hourly time frame. And this just gives us more information, more candlesticks, but it's the same pattern that we saw on the daily. We've got that pullback here of last week, the new high forming. The Monday we pushed above, but then we closed below. So on the Wednesday morning, we opened at this level right here. And although we got a little push up during the Asian session, in the London session, we got a very large bearish candlestick down. And then the 6 o'clock in the morning close, which was at 10, closed a short bullish candlestick. Now, I actually set a sell order to begin with because I thought that given Monday's pin bar candlestick and the way that Tuesday didn't break Monday's high, I thought that we were having a little pull up here to actually give opportunities for shorts before price was going to drop. And so Wednesday morning, before I went out with the boys, Wednesday is our day that we go out with some friends. So before I went out, I actually set a sell limit order. So I got in short to this trade to begin with. Now I'm going to move down to the 15-minute time frame because this is, for me, the time frame that I use for trade execution and for those finer details. And I'm going to show you exactly where I was in time when I was managing this trade. So I've moved this on to just at the start of the New York session, which is 1:30 here GMT in the UK. And I really love using the 15-minute time frame because it just gives you those extra candlesticks that help you to really make good analysis to see what's happening. And as you can see from this market open here, we've got the push up, a new high of day, but we had a big drop down during the Asian session. During the London session, price actually pulled back up here, and that was where it triggered in my sell order. So I was short in this trade. And when I loaded up the charts to check this at the New York Open at 1:30, at first I was a bit unsure because we didn't immediately drop down, but I saw that we had a big bearish candlestick here at my entry, and then we had another bearish candlestick here, and I thought, okay, this is looking good for shorts because we've got two candlestick signals. It looks like it should just drop now. That would be a double top pattern. Another wick rejection, rejecting this. After I saw that candlestick, I decided to just set a break even stop. Now, I don't always do this because I like to give the trade room to move. But because we'd had one big bearish candlestick here, one bearish wick rejection here, and another one retesting my entry and dropping, I thought that if it truly was weak, it should just drop. There was no news due out. There was no reason for the market to be influenced. It should drop. And if it didn't, I didn't want to be caught in that crossfire. So I set a break even stop. Price closed quite a bullish candlestick there. It's building support. And at that point, I thought I'm probably going to get stopped out. And it pushed up and it stopped me out. So at first I kind of thought, that's it. And I thought, well, that doesn't have to be it, because if I don't believe price is going to go down, which direction is it going to go? It's going to go up. So I waited, and this candlestick was the confirmation for me because it closed above this level right here. It had come back up to the current daily open. It had closed above this support area here. And when I saw that candlestick forming, I saw the potential of this being a double bottom pattern, because we've got the one down there and this level here be like that. Patterns aren't always picture perfect. They're not always textbook. You have to work with what you've got. But when I saw this forming, and keeping this in mind with time theory, which is a large part of my strategy, this was after the 2 o'clock closing candlestick on the 4-hour. So generally, you tend to just see a push. You don't tend to see too much indecision in a normal market condition. So at this point, I set an order for a buy. I set it at 59, just at the low there of that candlestick. And I used a tight 10 pip stop just below this pullback because I was looking for an immediate push, and I felt that if there were other traders like who I was doing that was short, I thought that there would be a lot of stops that were going to get hit that would propel price up. So see this wick here, that triggered me into my entry, and then immediately we got that strong bullish push up. Really nice to see when you get into a trade. Even better to not be experiencing drawdown. Once I'm into this trade, usually I would aim for a 1.5R target, which ordinarily would have been hit. But because I saw a lot of potential with this trade, I decided to aim a bit higher. So I was actually aiming for a key daily level, which was all the way up here. Because it was a Wednesday, we'd had this choppy start to the week. I actually set a crazy 100 pip target. Aiming to fill this gap here, but I didn't intend to leave it at all. I had alerts set and I planned on trailing a stop loss along the way. You've got to aim big sometimes, right guys? Now price pushed up, and as it pushed up, every 10 pips that it moved up, which is what I was risking for the trade, I had an alert set. So every time we pushed up, another alert went off. Now when it got over this key psychological level, the whole dollar, £1.27, that's when I was actually watching it closely because it's quite extended here on the current day. We've broken this key level from last week, from the Monday. So in that respect, price has achieved, it's already broken a key level. And that would be decision time. We'd either get this continuation rally up or it would fail. It would be a false breakout. Now, as we got this bearish candlestick down here, we got another push up, and then price had this strong bearish close here. I was watching this in real time whilst playing hide and seek. And then I decided to just get out at 4.5R, which was around about 1.2705. At that point, I didn't know whether we were just getting a pullback and then a continuation, but I was quite happy with that win. That was my biggest win so far of the year, so I was very happy indeed. And I decided to take the cash and dash. And just skipping it on here, the next day I checked the charts to see what would have happened. I expected it to have pushed up and to feel bad that I hadn't followed my target, my original plan. But I was quite happy to see this play out, that actually I got out at the perfect point because price, it just came straight back down. And then on the Thursday, we got this very strong drop here, which actually continued into Friday. I managed to get some nice scalps on this move as well on my other account, my live account. I don't overtrade my funded account. It's the way that I do it with my trading psychology. But it looks like we have got a false breakout of this level, and it will be interesting to see how pound dollar reacts moving into next week. Now you might be wondering, how did I manage to keep my mindset strong after taking a losing streak? Well, the key is accessing what is called the flow state. The flow state equals peak trading performance. When you're in the flow, you're not just reacting emotionally, you are responding logically to the market. And the flow state isn't restricted to just trading, it can be accessed no matter what performance sport you are doing. For me, I maintain my flow state through various practices such as regular exercise, carrying out yoga, daily walks in nature, which I find to be really grounding and helpful, as well as mindfulness practices. Keeping perspective in trading is also vital. Life is more than just those charts. And let's be real, the sunshine coming out here in the UK certainly helps. How do you stay in the flow state when you're trading? Drop a comment below, I'd love to hear your thoughts. Meanwhile, if you've enjoyed this video, please remember to like it, don't forget to subscribe to the channel, and I'll catch you in my next video. Thanks for watching, bye!